This conference will now be recorded.
We begin on fraudulent companies to give you a sense of the importance of the statement of cash flows, the importance of the statement of cash flow. This is a statement that focuses on the cash activities of the company because of accrual basis. And I showed you last time what happens in accrual basis, what can happen with journal entries. And you all were supposed to do a cash flow statement. Did y'all get the cash flow statement done and turned in for those 4 journal entries? Okay. Okay. Y'all better be doing me a favor going to room 206 then, Miriam.
Hold on, Doctor. What's M206? Is it just your class?
That's all it's in 206. But
Like the
they'll,
people that need tutorials?
yeah,
Oh, okay.
we'll talk about it later. Okay, so the cash flow statement is the statement that we're going to begin to work on. And this is a statement that, you know, was available and is available. If you Google the financial statements for a company, cash flow statement is there. But people don't look at it. They look at the balance sheet, they look at the income statement, and then they stop. And maybe if they'd looked at the cash flow statement, they would have learned something. And so all of you will be selecting one company. You're supposed to do that today, at least by Tuesday, that you're going to investigate their cash flow statements for to determine if you would invest $1 million in that company. That million could be your cash, or if you go work for a company, it's like, you need to make sure that company is stable. Now, you remember we said that when companies form, you put cash in and you receive back common stock. There's an entry debiting. This is the first thing that happens. A company, when it's formed, it debits cash and credits common stock. The goal of the company is always to increase this cash by earnings. Okay. The goal of the company, that is, you put your 100,000 in, then at the end of the year, at the end of several years, you want more cash in there because if you put your money in the bank in a savings account, you would expect it to be more. So when we're looking at a company, we want the cash to go up through earnings. We want the cash to go up through earnings. The income statement is going to show revenues minus expenses. Okay. And the balance sheet is going to show how a company looks at a point in time. And we'll get back to that uh, company that we looked at in a few minutes, last time. But there's more to the story. And so we come to the statement of cash flow about a firm's liquidity and solvency. And it's going to look at the changes in assets, liabilities, and equity. It's going to help us with the comparability of firms. It's going to give us some idea of cash flows. And 5, as we said, it can aid us in the detection of fraudulent activities. So you can have all of the promises of revenue that you want, but when February 1st came down, a lot of you had to do what on February 1st? What did you pay on February 1st?
Pay rent.
You paid rent. So I don't care how many promises of income you had. If you did not pay your rent, what was going to happen? What would happen if you don't pay your rent?
You get evicted.
You get evicted.
Well, not yet. Late fee.
And then evicted.
So when we're looking at companies, they have to have cash, and the cash can come from one of three sources. It can come from operating activities, you know, selling goods, buying and selling goods. It can come from investing activities, and it can come from financing activities. Let's look at you personally. When you graduate, you want a salary, okay? So that's, for a company, that's operating activities. And you want to be able to make some investments, buy a new house, buy a new car. You also want to pay off some debt. You want to pay off some debt and have money left over. So that's what you're trying to do. So when we look at a corporation, what we want to see is the corporation having some money to expand and to pay off debts. And so we have these four parts to the statement of cash flow. Operations, that's like your salary. And so when you graduate, it would be great if you had a salary of $100,000. Wouldn't that be a good thing?
That's a whole blessing.
And
That'd be
say
great.
what?
That'd be great.
And wouldn't it be good if you could pay $40,000? So use 40,000, get a new house and a better place to live. Noise. Women's thinking on that noise. Okay. And it'd be good if you could say pay about $20,000 on student loans, right? That'd be a good thing too for those of you who have loans, and still have what, 40,000 in the bank. Okay. So your parents and significant others would be extremely delighted if this was a situation. You had a salary, you bought some new assets, you paid off your student loans, and you still have money left over. So when we look at a company, it's the same thing. If we're talking about Macy's, we want Macy's to have cash from operations, okay? Selling clothes. We want Macy's to be expanding, so we want this money to be negative. And uh, we want Macy's to be paying off some of the debts it owes and still have cash left over. Now, you could make a decision that, okay, I got 100,000 and I want to go to Vegas, so I'm going to sell my car. I'm going to forget about paying off debt. I'm going to sell my car for $30,000 and go to Vegas with my cash and lose it all. What's going to happen when you get back if you go to Vegas in that situation? What kind of situation would you be in if you sold your car and went on vacation and went to Vegas and came back? What would be the situation?
You gonna be down however much money you sold that car for?
You wouldn't even have a way to get to work, right?
Oh, that too. I mean,
So when we look at companies, it's the same thing. We're concerned that they have a positive amount of money from operations. That investments is negative because they're expanding, they're paying off debt, and they still have a positive change in cash. And so when you look at a cash flow statement for a company, this is what you want to see. You want to see operations positive, investments negative because the company's expanding, financing negative because it's paying off debt, and it still has cash left over. That's what you want to see. That's a guide of what a good cash flow company will look like. So everybody will select a company using this model. Look at a company that's publicly traded that you want to work for or you want to invest $1 million in, and then just make a decision. I'll do it or I won't. And I'll put an example, some in the prime, but I'll put an example in there for you. So we see this model of how the cash flow statement should look, right? We see the model of how a good cash flow statement. Does everybody
Excuse me.
see that?
Wait, hold on. Excuse me, sir. Are we? I don't know if we are looking at the same thing, but am I supposed to be looking at something that says Part One operations? The cash flow provided from operations should be positive. Then it has number two and number three.
That's what you should be looking
Oh, okay. All right. Then yes, I see.
at. So we're looking at a new statement that a lot of people did not learn to look at. And so when investment decisions came down the road, they sort of missed the fact that there was no cash there. So let's go see if we can go to that little cash flow statement that you're supposed to do for me. Let me see if I can find it. You should be pulling it up too. Didn't I send you all a cash flow? Fargo, Broadcom, Solution, Journal entry, Rattle. Oh, I don't see that. Counting. Okay, go to. I don't know why that statement does not want to show up. Finally, cash flow. So this is what you had last time, And I asked you all to do a cash flow statement for year one. If you remember, when we looked at this statement, it said the net income was $6 million. It said it had assets of $12 million. And based on that, we're making a decision. So let's go back to the journal entries once again. We're just looking at these first 4 journal entries. What's going to be the location in the cash flow statement of journal entry 1?
3 source.
3.
Louisiana, that's going to be 3. What's going to be the location of number 2?
Nothing.
Okay, so that would be, we'll put a dash there. That's not going to be on the cash flow statement. What's going to be the location of number 3, journal entry 3?
Source.
3.
3 source.
It's going to be in 3 too. Get out here. Okay, so let me leave that dash alone. Let me put 3 here. Then what's going to be the location of journal entry 4?
1.
1.
Going to be in 1. Okay. So now can you all do a cash flow statement now?
Hold on, how was the last one 1?
If you're paying expenses, that's an operating item.
So
So
if you're paying expense, okay.
that's an operating item. That is for Macy's to make money, it's got to pay rent, pay workers. If you work at Macy's, you want to be paid. So the current things are there. So can we go to the statement of cash flow now and do this statement of cash flow? So I'm gonna let you all do the statement of cash flow now. So fill out the statement of cash flow. And then tell me how it compares to the model. So fill out the statement of cash flow. You'll have your cash flow statements done. Feliciana, you got this cash flow statement done?
I did, but for journal entry 3, you put part 3 source.
Did I put part 3?
I got
Oh,
2 million, but I put 1 source. I don't know if it's 2 million though.
We just got to remember, we just bring them in. So let's do the first journal entry, common stock. Where we're going to put that at? That's going to go in part 3. Okay, so then we said that we would skip journal entry 2. And then for journal entry 3, we said that's going to go there also. It's a source. Whenever cash goes up, it's a source. So this is the common stock. Cash came from that. Cash came from the note that was borrowed. Then what we're going to do is that final journal entry. Salary expense, that has to go in operations, right? And it's a use. Whenever cash goes up, it's a source. Whenever cash goes down, it's a use. So we go to the statement of cash flow. And we get the salary. That's going to be a use of 4,000.
Sir, I can't see it on your computer.
Okay. You see it now?
No.
Anybody else see it?
I can see it.
You can always adjust your screen now. Okay, so based on this in part one, we're just doing an illustration. It's not just trying to show you just a little bit what would happen.
Is
So
it a
on
different?
part one, you had a minus 4 million, right? Part two, you don't have anything. Part three, you got a plus 6 million. And so your change was 2 million. So if you had a company that showed net income of 6 million and it had 12 million in assets and 2 million in cash, if you stop here, you might think it's a good investment. But when we go to the statement of cash flow, we see what? All this company did was to put some cash in and borrow some money, okay, paid out expenses from borrowings, but had nothing in revenue. And so this is how the companies created the revenue. This is what they did. So if you looked at this statement, and what you always know, if a company has net income, but it doesn't have, and this is negative, something is wrong. If a company has net income, but its operations is negative, so you may not overall understand it, but you should know something's wrong with the company. See, we had this model that said what? What did our model say? Operations should be positive, investments negative, and finances negative 400,000. Well, the operation is negative. So this is how you go and you detect when there's an issue with companies. If you had a Ponzi scheme, what would be the case? It would look just like this. The Ponzi scheme wouldn't have much in the way of operations. they would have the money they put in and the money that they were giving people to put in. So maybe they might pay you something, uh, but they don't have anything coming in operation. So eventually, the Ponzi scheme is going to blow up. So in a Ponzi scheme, a person puts $1 million in, okay? Then he gets, these other people to put five, gets another uh, group to put in 2 million, and he takes $1 million out. Then he gets another group to put in 3 million. He gives this other group $1 million, and he takes $1 million. Okay, but that final group that is putting money in the Ponzi scheme is not going to be the money left because they don't have money in operation. So that, uh, ladies and gentlemen, and financial scholars, is the statement of cash flow and what it is supposed to do. And if you can't look at a statement of cash flow, then you can't invest money properly. If you
I
can't
have a
look at this
question.
thing, yes.
Where is that form, the first form that you were posting at? I don't see that on Blackboard.
What we're looking for,
This one right here that you have up.
the trial balance, or what I'm doing now.
What you're doing now, the cash flow statement format.
Yeah, that is in the primer on a page of.
Oh, okay, okay, okay.
So when I'm teaching, most times I'm going to the primer. You can't go exactly with my page because I updated and everything. But this is in the primer. It's chapter 8, statement of cash flows, indirect method. Now I have not pushed the way that we learn it in principles one. I have not pushed that much because we might have 1 million journal entries, okay? And so we got a few journal entries. We can do the simple cash flow statement. But based on that cash flow statement and what we looked at, would you now invest money in this company? Are you going to put your money in this company?
No.
I
Not a bit.
Not a bit. So, someone has asked, you got an individual assignment coming up. You got an individual assignment where you're going to go and Google a company's cash flow statements. Let's say do a week from today. And this is an easy point, just like uh, your fraud and company reports. You're going to look at cash flow statements for 3 years uh, and make a decision. I will invest $1 million or I would not invest $1 million. There is no right or wrong answer. You'll learn more if you don't invest $1 million in terms of what companies are doing. So, and we'll get back to it, but you ought to Google.
Will we email you this assignment? Or is
So
it
what?
like a, will we have
It's
to
good.
email you this assignment?
I'll get it out to you. I'm just kind of letting you know, priming you for it. It is a simple assignment. You don't calculate anything. You go and you Google the cash flow statements for a company that you might be planning to work for, or that you want to invest in, and make a decision. Hey, I think, so you get used to looking at this statement. So it's not a hard assignment, and we'll get back to it eventually. But eventually, that's what I want you to be, to do, to go and Google a company and using the criteria that we have about how a cash flow statement should look. You just make a decision. Either you would invest would you invest $1 million? So you sort of use this as a guide. They got money in operations. So you might even know how to calculate the statement, but you know, you had $1 million and you had somebody invest the money for you. Once they selected the companies, then you come behind them and look at this to make sure that there was no issue. You cannot just look at the income statement and balance sheet. You got to look at this statement. Now, if we have 4 or 5 journal entries, we would do the cash flow statement that way. But we're in principles 2 now, and so we're gonna do the cash flow statement a different way. Because if we had 10,000 journal entries, it would be very, very problematic to do it that way. So we got an indirect way, and we're gonna start this by looking at the accounting equation. Asset equal liabilities plus owner's equity. Does everybody know that statement? Does everybody understand that statement? Then
Can
assets
can you
equal
break it
liability.
down?
Say what?
Can you break it down one more time?
The fundamental equation in accounting is assets equal liabilities plus owner's equity or stockholders' equity. That's the fundamental equation on what everything in accounting is based. Asset equal liability plus owner's equity. That's the foundation behind accounting. Everything we do. What is an asset? That's something of value. What's a liability? That's something you owe. And your equity is the difference between assets and liabilities. Let's talk about you personally. Everybody in here has a balance sheet, which is what this reflects. Everybody in here has assets, liabilities, I'm assuming, and an equity. If the assets that you have exceed your liability, you have a positive equity. If your liabilities exceed your assets, you got a negative equity. Okay? So it's nothing uh, overly, you know, I would say foreign about this concept. You personally have assets, liabilities, and your equity is the difference. Does that make sense to everyone? Okay, moving right along. Assets equal liabilities plus common stock plus retained earnings. So we're just expanding that equation. Then cash plus the other assets equal liabilities plus common stock plus retained earnings. Cash plus the other assets equal liabilities plus common stock plus retained earnings. We just still working with that equation. Expanding the equation further, cash equal liabilities plus common stock plus retained earnings minus other assets. So we move the other assets to the other side of the equation because we just want to look at cash. Then cash equal current liabilities plus long-term liabilities plus common stock plus retained earnings minus the current assets minus the long-term assets. Going on with our equation, cash equals the current assets plus the long-term liabilities plus the common stock plus the net income minus the dividends minus the current assets minus the long-term assets plus contra assets. So that's that same equation. We just expanded it the other way. And so when we do the statement of cash flow, now we look at the change in cash is going to be equal to the change in everything else. So we're going to now do the statement of cash flow when the change in cash is equal to the change in everything else. That's how we're going to determine the statement of cash flow. So we still uh, are working with parts for the change in cash and parts 1, 2, and 3. And we just have to determine where all of these changes are going to go. And to make your work easy, as I normally do, I got a template. So the way you're going to calculate the statement of cash flow in the future is working with this template, starting with net income or net loss. And you're going to work with this template. So you will review this template next time, and we'll go over an example next time. And eventually, we'll get to some problems. Problem 1, 2, 3, 4, 5, 6, 7, and 8. So you know what that means, correct? Each team has a problem to work. Each team has their problem to work. And we'll come up with some strategies on that for next time. So you just got your introduction. But in getting your introduction and working with statement of cash flow, that's new and that's different, but it's like everything else new and different that we've worked with. You're going to learn how to do it. Let me see here if I can. And I think I have some leftover cash flow reports, correct? Is that correct? Let me see here. Let's see. Okay, what fraudulent company report did we miss? Who did we miss?
We haven't went. Team 6 haven't went, sir.
Who submitted for Team 6?
I did. I did, sir. Joshua Lathan.
Josh what?
Joshua Lathan.
Okay, Joshua Lathan. Uh, Anybody else submit for this? I don't see it in here.
Bro, I turned it in.
Wait a minute. Uh,
Assignment. Project company.
okay. Yes. Still not showing up.
I turned it in under the fraudulent company report,
Mm-hmm. Okay, I see it now. So tell us about Tyco. And as you tell us, can everybody see this now?
right? Let me see if I can see it. I can't see it on your screen, but I got it pulled up on mine too, though.
Okay, let me see if I can download it. Can we see it now?
No. Oh,
You can't see it? You can't see it? Can
we
anybody
can
see
see
it?
it. Yes.
Okay. All right, so Joshua, tell us about Tyco.
So it's a company that's still around right now. It's been around since the '60s. Um, it started off as a security tech company. They've expanded into like fire protection and like telecommunication. Uh,
Okay.
so oh, I was gonna let our next person go and do like another introduction.
Could you
Okay.
click the slide? Thank you. So, Tyco is known for their 2002 scandal that resulted in their CEO and chairman, Dennis, and former corporate chief financial officer, Mark Swartz, stealing $600 million worth, $6 million from the company. As Joshua stated before, this was a company known for their electronic and undersea telecommunication, and since then has expanded. The fraud went underwent two investigations. The first one resulted in them figuring out that no laws were broken. However, in the second one, they realized that evasion, improper use of company funds, and bribes to the board members were issued. Uh, the company the company was located in New York and relocated to Florida. And throughout that trajectory, they took out unapproved loans that they issued to their employees and then bribed their employees in a way to sign a contract stating that they wouldn't restate what had happened.
Hmm. So you would love to work for that company, get those loans, get those that bribe money, right, Karen?
Yeah, the loans were low interest or no interest fees at all. So yeah.
Mm-hmm.
Yeah, I would have. I would have. They
You
got
would
away with
have?
this. Yeah, they got away with this for a minute, sir. It was
For a
Uh-huh.
minute, yeah.
So what happened?
I think Jacob next.
Yeah.
Or is it
Ooh. Yeah. Wait, hold on. Did he skip a slide?
wait, or is it Madison? I think it's Madison.
Yeah, it's medicine. Yeah. Go to slide 3, Mr. Boyd.
Oh,
Yeah.
we're on. Okay.
You forgot one.
Is she here?
I see her. I think.
I don't think she's here.
Madison Malone.
Nah, Matt Tussin. Yeah, I don't think she's here.
Oh, okay.
I'll do her. I'll do her slide.
She's
Okay. So
is this
no,
Madison
this
Malone?
Matt.
Is this
No.
Madison?
This Matt Dixon.
No,
This
No.
Matt.
no, no, no. Different medicine. Different medicine. Different medicine.
All right, go ahead.
So what did they do? The defendant broke federal security laws by engaging in numerous illegal accounting methods from 1996 to 2002. Tyco overstated its reported financial results, used reserve accounts improperly to enhance and smooth reported financial results, engaged in improper acquisition accounting practices, and concealed substantial amounts of senior executive compensation in a large number of related party transactions from investors, according to the complaint. And it was over $50 million dollars that was fraud.
Mhm.
Oh yeah, you next, Jacob. Jacob.
So yeah,
Oh
can y'all hear me?
We can hear you.
yeah.
Can you hear me? All right, perfect. So the case number was 06-CV-02942-RWS. So what happened was the defendant was ordered to pay a total of $50 million in disgorgement and penalties, right? And then on April 18th of 2013, what was that, like 9 years ago, the commission filed a motion for an order to transfer the assets of the fair fund to the distribution agent, and for the distribution agent to distribute approximately $56 million to eligible investors. It's the eligible investors in quotation marks. And then later on, literally a week later, on April 25th in 2013, the distribution agent to distribute all the funds except for a reserve of $150,000 to eligible investors in accordance with the distribution plan. And then 2 years later, on December 2nd, 2015, the commission filed a motion for an order authorizing a second distribution of approximately $2.39 million to those eligible investors that negotiated their first distribution payment. Hmm, hmm.
So the final court orders were November 24, 2010. They approved the distribution plan. Um, so he kind of went over the payments that they have, but they also had to pay payment of tax and administration fees and expenses. Uh, the court in that private litigation approved a settlement creating a $3.2 billion settlement fund. Uh, Claimants who purchased Tyco common stock option contracts or debt securities during that period from the trade date from December 13, 1999 through January 7, 2002 were the people that were eligible for these repayments. So my last slide was kind of what Jacob went over, going over how much they paid, starting off with that 56 million in 2013 and an additional 2.3 million 2 years later in 2015. And their final payment was made in 2018. Also, I don't know how to say his name, but the CEO, after he went to jail, I believe 2000. Which year did he go to jail?
He went to jail in 2005.
Okay,
Well,
and he got
2004,
out.
2005, yeah.
Okay, and he got out for parole, 2014 January. Um, and they did lose their job. And yeah, that's pretty much it. They were charged with grand larceny, securities fraud, and falsifying records and conspiracy. Because even in like one court, like they were saying they didn't find nothing in the first trial because they had a conspiracy that they was working with one of the jury members. They seen the CEO nod with one of the jury members. So they had like dropped that case and did a mistrial. Yeah. Yep. That's pretty much it.
So, how much was the fraud?
Uh, 600 million, but they had to pay back 50 million.
So the fraud was 600 million, and how much did they pay back in total?
They had to pay back 50 million, 56.2 million to be exact.
150, 50. So what would be your situation if you were a shareholder in this company? If you'd invested $1 million in this company, how much would you get back?
If you invested a million,
Uh-huh.
might need a little help with that.
Well,
I mean, I know you'll get your million, and maybe
okay. The fraud was 600 million, okay? And they paid, let's say, 60 million back. So that sounds like 10 cents on the dollar to me. Is that right, Karen?
Yes, sir. I'm trying
So, if they defraud 600 million and they only pay back 60 million, then you're only getting 10 cents on the dollar.
hmm.
So are we getting half? So we getting 500,000?
No, everybody's getting that.
Oh, oh,
Oh,
oh,
now you
they,
see.
they cheap. They cheap
Now
for
you
real.
see. See, you didn't get it. You get your percentage, which is 10%. So whatever you put in the company, you're getting 10% back.
Oh boy, that's janky.
So
What is it?
that's why that's why you have to look at a statement of cash flow, see if you can pull out some things like this and pick up things like this. And this is why you're trying to see if they had net income, did the cash go up? That's the bottom line. If they had net income, did the cash go up? And that cash didn't go up, then there is a problem. Any questions? So as you can see, companies are always doing this. And your job, if you go work for the company, what if you work for the company? If you're working for the company, what's going to happen? Either you lose your job or you participated, then you could face jail time. So you got to look, I want to work with an ethical company that's doing okay. Okay, so you got to make that determination. So now this comes to that individual assignment. Everybody in here is planning to work somewhere or invest money somewhere. You are to select a publicly traded company. And with that publicly traded company, you're going to look at their cash flow statements for about 3 years, their income and cash flow statements, and you just go make a decision. I will invest, I will not invest. You do not have to calculate anything. All you're doing is pulling the number, so if you were looking at a company to invest in, you would simply pull out the financials, and we're just saying not only look at the income statement and balance sheet, but look at the statement of cash flow, and especially based on that statement of cash flow, decide whether you would invest in the company or not. There is no right or wrong answer. You'll learn more if you reject the company. So no Microsofts, anything like that. I'll put that in the instruct. No Microsofts, and because those companies' stock is already high, so the company has to go up in value. And so if the company's already high, you're not necessarily going to make money. So no Microsoft, Apple's, or Amazon's. If you select one of those companies, I'm gonna cut your grade in half. I'll let you know early on. So you got to get a, you know,
When is this assignment gonna be due?
about a week from now. And this is not a major assignment. This is about an hour or so worth of work at the most. Well, I mean, you got to make a decision when you graduate where you're going to work. Are you maybe working somewhere now? If that is the case, you need to look at that company's financial statements, including their cash flow statement, before you make a decision on where you're going to work. If you don't do that, then you get into tycos and Enrons and people like that. So
So do we
that's
put
what
this
you want.
information? Do we put this
So what
information on the slide?
I'm
Do
gonna
we
put
put
it in.
this?
I will have an example of how your report should look under the cash flow tab in the course content. I'll have it there, and then I'll put it in the assignment tab too. So it will be there. There's no right or wrong way to do, no special way to do it. You do it your way in terms of whether I'm going to go work for this company, whether I'm going to give this company $1 million. Okay. That's what I want you to do. Select a company. It could be a company in Houston. Now it has to be publicly traded. It needs to be publicly traded. So you have financial statements. And so you're going to see the financial statements are there. So why don't we look up the financial statements for Circuit City? So everybody at this point, look at the financial statement for Circuit City. That one. Annual report. So what do you see here now when you see Circuit City? What else do you kind of see down here?
Comment.
hmm And so you have net operating uh, revenues and total assets and equity and working capital. Okay. So are you going to invest in Circuit City? And this person said you should invest in Circuit City. That's what they're saying. I guess they own COMEX also. So are you going to invest in Circuit City? Okay. So they have all, so that's so this is what people see. And this is what finance majors have to make decisions on. Are they going to invest in this company, or are they going to uh, loan money to the company? That's what finance majors do.
Professor Boyd,
Yes.
team one didn't go yet.
I thought y'all didn't go.
14-3.
Our team three. Did y'all want points?
Or team 8.
Well, we will hit you all quickly next time since I was trying to see if they had the uh they're saying these cash flow. Let me just see if we go further in here. Okay. So you see now they've got their consolidated summary of earnings. Okay. Then they got their consolidated balance sheets. Then they got their consolidated statement of cash flows. So this is what we want. So when you do your report, you simply come in here and just copy this out. So let's see if we can see how this cash flow statement look. So you all know Circuit City is off now. They send depreciation, cash flow, capital expenditures, other data. So what they're saying is when they add depreciation back to the net income, that their cash flow from operations were 593. Those would be billions. And we look at their pattern of cash flow from operations going up. The capital expenditures, they were high, but now they're dropping. And we need the other parts of it. Let's see. So they aren't making it easy for you. You know, they're supposed to have all three areas. And it's supposed to be in the format we discussed, but you know, company can do what it wants to do. Okay, this is the consolidated statement of cash flow from continuing operations. Okay, so that's just operations here. But now we need to know about, you know, things like what are they borrowing, things like that. So I guess they got it somewhere else. So you have to look at your company, and a lot of companies will have it all together, but they are trying to be a little sly at times.
Quick question.
Yes.
The operations would have been all three of those numbers? Or was that from each previous year?
Okay, here we come. Here we come to operations now. They got the earnings, and so they're saying it's 543. So they put it. So this is what you're looking for: operation. And the only thing you're concerned with this number here at the bottom counter. Then what they do in investing. So they purchase additional thing 156. Then looks like they issued some more stock. Then they had some cash in discontinued operations. And so the cash went up by 378 million. This is at the beginning of the year. This is the end. So they say it went up by 378. But what you know in that 378 is 50 million came from issuing stock. But still, that's a good amount that came from operations. But let's look at one thing. The cash went up by 378. So we see that. Looking at these earnings is 197. So you have to get into where did it come from? If the earnings are only 197, okay, we have to continue operations. But this is what you have to do in terms of looking at these statements. So you got to select your company. So there's enough stuff here if you want to select. Look at Circuit City because they got it placed several places. You can look at that. But that's what you're doing, and you're simply determining, okay, will I invest $1 million? Will I invest $1 million in this company? And for finance majors, when you get the Finance 360, they come right to the cash flow statement. They don't have you calculate it per se, but they have you make the decision based on all of the statements. So that's not a major thing. You go in, get a company, you look at it, you see. I put examples in there. That'll be doing a week's time. That's an easy 10 points. Next time we'll look at those other teams that need to report. So now you got to read the statement of cash flow in the right method. We'll look at an example of that. That'll be on Tuesday, and then on next Thursday, all the teams will be presenting their homework problem that they work. And on the following Tuesday, be exam one. So that gives you a sense of where we're going. You'll have
Professor,
exam one the following Tuesday.
what homework problem?
Beg your pardon?
What homework problem?
Well, each team, there are eight in there. How many teams do we have? 8 or 10?
I think we have 10.
We got
There are
10
10
teams,
teams.
We have
10. We
50.
got 10.
10. So
Yeah.
each team just does the number. Each team has a homework problem they do. And we're going to start off on one since that's the easiest one. But that's next Thursday. So on Tuesday, we'll go through how to do it. We'll look at an example. We have a template. If you didn't have a template, it's just like making journals. If you didn't have the templates, it'd be an issue. But you got a template. And you're going to learn how to do this because otherwise, when these WorldComs and everybody in run come out there, you don't have a way to look at that. And so that's what your education is for. You need to be no more than when you got here. So in this course, the plan is that you're going to know a lot more than when you got in the class. And hopefully you see it's kind of relevant, to uh, understand the financial statements when you're going to work for a company. That might be kind of relevant. And profit and not-for-profits have financial statements, okay? And profit and not-for-profits have people who participate in fraudulent activities, okay? Any questions? Any further questions? Well, you all have a good weekend.
I have some questions after class.
Okay, so you all have a good weekend and stay safe and read about statement of cash flow indirect method.
Also, Mr. Boyd, real quick, are we online or in person next week?
We're online next week,
Okay, just checking.
March
Have a good day.
March 1st, March 1st, unless I can do it
March.
earlier.
Okay, all right. Have a good one.
Wait, so Professor, just a quick question to clarify. So on Tuesday we're just gonna go over an example of indirect method, and on Thursday is when the team have to submit a problem.
Submit and present.
On Thursday.
Yes,
Okay, thank you.
you're welcome. Anyone else?
Okay, so I have a question. I don't know if you saw my message in the chat. But I had a death in the family, so I haven't been in the last two classes. I'm just trying to basically get an idea of what assignments we have to submit individually so that I can catch up.
The assignments, the main one is financial review problem 4. That was supposed to be turned in today. Financial review problem 4. And in
Okay.
Okay,
those
where can I
problems, you
find it?
simply beg your pardon.
Where can I find that? Because I don't. It's hard to understand all of the tabs you have under Blackboard.
Okay, what's always do is in the assignments tab.
Okay.
So it's also typically in course content. So when you look at the tab, we've been on the financial review. So everything we talked about and what we've been doing prior to today has been under the financial review tab and course content. Then anything that is due is in the assignments tab.
I
That's
had a
where you submit
question.
it.
I have a question.
Yes, Zalandra.
So the assignment that's due today in under the course content titles, some of them don't match, but I'm assuming the new student financial review problem 4 is the same thing as the the
Just
manager
do
account
the
financial
continuing
account review.
students. Just do the no, do the new student financial 4 and submit that. You're either doing continuing or new. So I'm just saying at this stage, because you're related to miss some time, just do the new student problem. And
Okay, but
that's
under
financial review problem 4.
okay, is it under the course content, the manager accounting financial accounting review problem 4? Is that the same thing?
Same thing.
Okay, I've done it. I just want to make sure that I submitted it under the right tab.
Yeah,
I
that's
was I
fine.
was assuming. Okay.
Okay. Still there, Brooke?
Yeah, I was gonna say about these tutorials, can we like do them next week instead?
Okay.
Um,
So
like
if
they
you
can.
can,
I'm like free Monday as well. I have like a class from 10 to 11, and then like I'm free after that, and then I have class at your class, and then another class at 1 to 2 on Tuesdays.
okay. See, what I really need is, for some of the students, they would, they won't use the spreadsheets or the Word document. So out front, there should be some, journal entry sheets and things like that. And it's just holding their hands to get through that.
Why won't they use the Word document?
I don't know. I gave them the attendance quizzes, and two thirds of the
Yeah.
people, 3/4 do what they supposed to do. But I got this 1/4 who didn't do that.
Do you have any accounting majors in there?
Yeah, but that was the first one, and they worked in teams. We did the journal, and the way we did them here, that's what we did. Okay, we did the same thing that we started this way we started this off. So you would think that if I gave you, uh, you would think, let me stop the recording.